rally. Gold is above $1,400 again, coming off its best week in 3 years. It did lose some of those gains today, but our next guest says gold has a much delayed breakout when it should have had a run up. For more on gold's push higher, we've got Alan Nuckman, Chief Market Strategist at Agora Financial. Thanks for being with us. And let's start with just what keeps gold here. It's easy to appreciate that when you're getting zero on your money, gold becomes a little more attractive than it was previously. But other than sort of folks who might buy for that reason, where does the momentum come from, Alan?
Well, it's taken us 5 years to get here. So like I said, it's very much a delayed reaction. There were so many times over the last couple of years the gold market should have shot up based on what was happening, fundamentally around us, but it didn't. So for whatever reason, it was just held back, and it had very much lost interest, somewhat similarly to Bitcoin. If you remember, Bitcoin here was just lagging for the longest time. Now it's started to get some attention once again. If you look at the gold market, it's been trading sideways for 5 years. We've finally broken out. I think part of the catalyst is obviously the dollar pushing lower, and the fact that we're actually going to lower interest rates as opposed to this time last year we were talking about raising interest rates. So I think that the fact that the dollar looks like it may stop going up, that's a positive for the gold market.
Exactly, Alan. To your point, this GTV chart on the Bloomberg showing how the dollar has broken a key support level at the moment. But my question would be, what happens if you see the dollar strengthen, given that it could be left as the only game in town? You are seeing other central banks around the world really itching to ease.
Yeah, there's so many things happening, and we're back to that race to the bottom that we had a few years back, if you remember that, where everybody was, decreasing their rates to try and make their currency, their economy more attractive. So we're in the same game again. I don't know if it's that much of an impact on the gold market. I think gold has just become a more attractive investment all of a sudden in people's minds where it had been forgotten. And you can look, we are in probably the most uncertain economic times of my life. Anything could happen on any given day. Whereas things used to be much more calm. It's exhausting, I'm sure, for you as well as for me as a trader, but it is opportunity. So I think if you look at the boards here to my left, you can see that we're pricing in a rate cut, obviously, in July. Now, it had been a 50-50 chance just a couple days ago that it was going to be a half-point cut or a quarter point. Now it's more of a 75% chance it's only going to be a quarter point. So that brings us to the question, what do you believe? Do you believe the bond market selling off, or do you believe the stock market just made all-time highs?
And when it comes to gold, of course, Alan, historically, inflation has been one of the primary reasons to buy it as a hedge store of asset. Because inflation is nowhere to be seen for the foreseeable future, does that put a cap on just how high gold can go?
I'm a price guy, and I'm all about the price. We've finally seen a price pop in the gold market, as with some other markets. So I'm looking for some follow-through. This breakout technically targets, we had a 200-point range between 1150 and 1350. So it targets, 1550. So we still have some more upside. That would still be, far away from the all-time highs in gold. So I don't look for it to enter the mania phase again. I think it's just become a more attractive alternative investment out there as we see bonds go lower and, stocks. I think the bonds going lower and interest rates going low, bond yields going lower anyways. I think that's going to be more attractive for stocks. And I think it's to the point where people just need to put their chips in different slots. And I think gold is just one of those slots where money can go.
Alan, if you're a price guy, does it worry you that at least in the technical side of things and the 14-day RSI, as this GTV chart on the Bloomberg shows, we are now in overbought territory? Could this signal, at least in the short term, that we could see a pullback?
Yes, definitely. And looking to add to the position, if you didn't buy it when it broke out above 1400, it's come back to that breakout, as markets often do. So you would use that as a support point on a weekly basis to see if that holds, and that would be a level you could lean against as a buyer. So, use that as an opportunity to wait to see how it pulls back, as we've done just a little bit here, and see what the secondary move is in this marketplace.
Alan, great to have your thoughts. Thank you. Alan Nuckman from Agora Financial.